Hello viewers, welcome to my channel. I'm Hasham. So till the last video I have completed 8 problems on computation of income from house property. Now in this video I'm going to cover up the next problem, that is problem number 9. So after completing 8 problems, hope you got a good command on the problems of income from house property. It's very simple. Every problem you will come across only 1 or 2 new points. Remaining the complete procedure is same. So you can easily overcome the problems on this income from house property. Now see the 9th problem. Before starting the 9th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take a printout, keep it ready and take a screenshot of the solution of 9th problem. Then I'll explain. Come on, see the 9th one. Sri Atmakaran Reddy owns 2 houses. Their municipal valuation are 30,000 and 48,000. So MRV of the first house 30,000, second house MRV 48,000. The first house is let out for residential purpose of 46,000 per annum, and the second house is let out to a company for its registered office at 54,000 per annum. Income Tax Act is not bothered whether property is let out for residential purpose or for commercial purpose. It is let out for 46,000 first house actual rental value, and second house actual rental value 54,000 per annum. Under the agreement, 50% of municipal taxes are to be borne by the tenant. So there is an agreement between the owner and the tenant. The agreement is 50% of municipal taxes will be borne by tenant and remaining 50% will be borne by the owner. Income Tax Act says municipal taxes will be allowed as deduction only if it is paid by the owner. So only 50% is paid by owner, so 50% will be allowed as deduction, municipal taxes. Then he claims the following deductions. For the first house, municipal taxes 3,000. Actually he paid 3,000 rupees. So complete 3,000 rupees he wants the deduction. No, municipal taxes of the house is 3,000. 50% will be paid by owner, so 50% will be allowed. Repairs 12,000, ignore. Brokerage paid to get the tenant, ignore. For the second house, municipal taxes are 5,000. Again 50% will be allowed. Repairs, ignore. Rent deed registration charges, ignore. Annual charges, ignore. Interest on loan taken to purchase the second house 30,000, but only 10,000 is paid so far. There is no interest on loan in the first house. There is interest on loan only in the second house, and the interest on loan for the whole year 30,000, but only 10,000 interest is paid so far. Income Tax Act says whether interest is paid or not, immaterial. The total interest charges for the year will be allowed as deduction. So 30,000 will be allowed. And arrears of rent received from the first house 16,000, which was not assessed earlier. The first house, there were some arrears of rent of previous years, and that was received during the current year, and it was not assessed to tax earlier. Now it will be taxable. Deduction will be given 30% standard action. The second house was vacant for 3 months. There is no vacancy period in the first house. The second house was vacant for 3 months. Compute the income from house property. That's all. Separately we have to calculate for first house and second house. So first of all, 9th problem, say Atmakaran Reddy. Computation of income from house property, first house. Gross annual value less municipal taxes, NAV deductions, income from house property. Now come to working note. GAV is higher of the following 3. We are not given any standard rent. The house is not governed by Rent Control Act. Simply we have to consider MRV, FRV, ARV. MRV is given in the problem 30,000. Fair rental value not at all given in the problem, put a dash. Actual rental value given in the problem 46,000. There is no vacancy period in first house. So only 2 values are given, MRV and ARV. The higher is 46,000. So we have taken GAV 46,000. Municipal taxes 50% will be borne by the owner. So 50% of 3,000. 1,500 will be allowed as reduction. Deduct 44,500. 30% of NAV, standard deduction. 30% of 44,500, 13,350. There is no interest on loan in the first house. Put a dash. Then deduct 44,500 minus 13,350. 31,150 is the income from house property of the first house. To this, I am adding arrears of rent. In the problem last line it is given arrears of rent received in the first house is 16,000, which was not assessed to tax earlier. It was not taxed earlier. So now standard deduction 30% of NAV will be given. So 30% of 16,000, 4,800 allowed. So deduct 4,800, 11,200 is the income. Add up 31,150 plus 11,200, 42,350 is the income from house number 1. Similarly, house number 2. This is house number 2. So again, format you write down as usual: gross annual value, municipal taxes, NAV, deductions, then come to working note. In the second house, there is vacancy period. So that's why we have to calculate adjusted ARV. Because of vacancy period, we have to calculate adjusted ARV. So adjusted ARV is equal to actual rental value of 12-month period for the whole year minus vacancy period rent. So actually the annual rent is 54,000. It is given in the problem. Second house was let out to a corporate office of the company for 54,000 per annum. So 54,000 divided by 12, if you make, you will get 4,500 per month. The monthly rent of the second house is 4,500. So 4,500 into 12, 54,000. How many months it was vacant? 3 months the second house was vacant. So 4,500 into 3, 13,500. Deduct 13,500, 40,500 is the adjusted ARV. Now this adjusted ARV will be compared with the ERV. ERV is higher of the following to MRV, FRV. MRV 48,000 given, FRV not given. The higher is 48,000. ERV 48,000. Adjusted ARV 40,500. This adjusted ARV is less than ERV on account of vacancy period. On account of vacancy period, the adjusted ARV is less. In that case, Income Tax Act says if the adjusted ARV is less than ERV on account of vacancy period, then whatever adjusted ARV is there, that itself is the GAV. Don't take the higher. Whatever adjusted ARV is there, that adjusted ARV itself is the GAV. So here, adjusted ARV is less than ERV on account of vacancy period. Hence, GAV is equal to adjusted ARV, that is 40,500. So I have taken 40,500 GAV. Municipal taxes 50% will be borne by the owner. So 50% of 5,000. 5,000 rupees municipal taxes given in the problem for second house. So 50%, 2,500 deduct 38,000 NAV. 30% standard deduction. 30% of 38,000, 11,400. Interest paid on loan taken to purchase the second house. 30,000 is the interest for the year, but 10,000 was paid. Income Tax Act says irrespective how much is paid, the total interest for the year will be allowed as deduction, even on due basis. So 30,000. So 41,400. Deduct 38,000 minus 41,400. 3,400 negative you are getting, minus you are getting. That means there is a loss. Loss from house number 2. Loss from house number 2. So finally, we can set off. First house, there is an income of 42,350. Income from house number 1, 42,350. And there is a loss in house number 2, 3,400. So intra-head set off. It is called intra-head set off. Within the same head, we can set off loss from one source with profit of the another source. So here profit is in house number 1, loss in house number 2. So we can set off. So income from house number 1 40 to 350 minus loss from house number 2 3400. So income from house property is 38,950. That's it. This is the end of ninth problem. In this problem, a number of points are there that you should write in working notes. I have not written in the working note, but you have to write. The first, 50% of municipal taxes are paid by tenant and remaining 50% paid by the owner. So according to the provisions of Income Tax Act, municipal taxes will be allowed only to the extent which is paid by the owner. Owner, whatever municipal taxes paid, that will be allowed. So 50% is paid, 50% is allowed. Right? Secondly, interest on loan will be allowed as deduction even on due basis. Even interest is not paid, it will be allowed as deduction. That is also one of the provision. Next provision, already you have written about adjusted ERV. Now next provision you should write on repairs, rent, deed, registration charges, annual charges. These are not allowed as deduction. These are not allowed as deduction. Repairs, brokerage paid to get the tenant, all these are not allowed as deduction. Arrears of rent, if it was not assessed earlier, now it will be assessed and 30% of NAV will be allowed as deduction. That's all. So this is the end of problem number 9.